morning, everyone. Welcome to Facebook's AMS live call. Today is June 6th, and we have a packed call for you guys today. I have a few things for you, and then we're going to be hearing from Skylar Smith on how the NSSA certification is already helping him in his business. And then we have an agent live interview with Sean Ruggiero interviewing Matt Smith. After that, Jack Yu is going to be training on the new ATHENE Agility product. And then we'll be hearing from President of Priority Life Group, Nick A., for a wrap-up. So to get started here, I have our weekly numbers for week 22 of IUL issue paid business. We have Gregory L. with 3,844, Israel W. with 1,650, another one for Israel with 2,334, Ulysses C. with 2,380, David W. with 4,452, Ian H. with 876, Lisa P. with 913, Brian R. with 823, Lewis M. with 1,775, and Vin L. with 1,657. And then for our weekly issue paid annuities, this is annuities issued from May 23rd to May 29th. We have Teresa M. with 168,000, Rebecca B. with 156,908, Daryl A. with 108,227, Dionis G. with 95,629, Brandon L. with 77,744, Stephen Y. with 70,000, Jonathan W. with 60,439, Josh L. with 56,737, Amy M. with 52,148, Valerie W. with 50,000, Alvern V. with 48,667, Chris O. with 39,152, Mark M. with 32,450, Dawn S. with 30,263, Rebecca B. with 29,155, Jerry B. with 25,000, Len D. with 20,000, Jesse P. with 16,257, and Silvana P. with 15,000. This brings our total to just about 1.2 million for the week. Being that this is the first week of June, that means we get to announce our promotions for production-based promotions for annuities. So we had 24 agents write their first annuity in May, which is amazing. I think that's the most we've had in 1 month. So these people were all promoted to the yellow level. We have Michael O., Sarah Y., Chris F., Georgina S., Gregory M., Jordan D., Selena M., Nadine L., Monica L., James B., Mark P., Tyson J., Zachary T., Lance N., Jeannie O., Patricia G., Janice H., Jim O., Marcus M., Daryl A., Jerry B., Jesse P., Jerome D., and Lisa J. Great full board. I love this, you guys. Congrats on writing your first annuity. In May, we also had 2 agents pass the $500,000 mark and promote to the blue level. That's Nadine L. and Jonathan W. Congrats, you guys. And then we had 1 agent pass the $1 million mark and be promoted to the silver level. So this is Keith C. Good job there, Keith. So great promotions this month. It's exciting to watch these people grow and truly earn more based on your production and commitment to annuities. One last thing for me to cover before I hand the call off here. I wanted to point out our new brochures that we will be phasing into. So on the AMS site where you can order brochures under the marketing tab, we now have a couple that are customizable. And as we get rid of our inventory for the other ones, we will be transitioning them all to be customizable. Right now, there are 2 that are customizable, and I'll show you those in just a minute. But I want to point out here what we're doing. So we are actually now printing these on demand when you order to include your own personalized agent information on this. And so you'll see a few features here. On the front page, we have Matt Smith's company logo, Family First Life Northwest. So that will be branded with your company logo. We have his picture here, and then his name, contact info. If he has a website, you can put as little as much here as you want. Email, you can put address if you have an office address, phone number. But this is what this will now look like. And so when you're getting these and you're bringing them into the home, you're actually leaving them with the client, and they have your own personalized information on there. So next I'll show you where to find those customized brochures and what is important to make sure that we can get all your information transported to the brochure when we print them. So under the marketing tab where you can order brochures, you'll see them all here. If they say customized right here, that means they are ready to be launched and customized. So the Social Security one, for example, is ready. This one is not, so that will just be your base version. You'll see the price is different when you select that. It's cheaper to just get the base version, but as we sell out of these, we won't have them available anymore. And then this one down here, the guaranteeing safe growth, that one is customizable. You'll see that here if you select it, the price is different. And so that would be the brochure that I just showed you that has your agent information. And so the important thing here is to make sure that your profile is completely up to date. This is where we pull all those elements from and make the process automated and seamless. So you will just want to make sure you have a few things up to date here. I'll point out. Make sure your agent picture is uploaded here. If you have a company logo that you are using, put that here. If you don't have a company logo, it's fine. I can still brand it with the Family First Life one. But if you'd prefer to use your own company logo, please upload that here. And then your agent information right here. That's where we'll be pulling everything from. And so I just want to make sure that you have your email up to date, your phone number, address if you wish to put an address, and any website if you have a website that you would like included. All that information will be printed on the brochure and customized and ready for you to hand out and leave behind at clients' homes. That is all I have for you this week. I think we have Skylar Smith up next. We'll see you next week. Guys, have a great weekend.
Hey everybody, Skylar Smith here. I just wanted to give a quick endorsement for the National Social Security Advisor course. I just took that this past week and it's already starting to pay off. I went into a particular scenario today with a client where she was getting ready to file for her Social Security benefits, and I was able to teach her and help her with something called a restricted application. Now this restricted application is where she was able to not take her own benefits but take the spousal benefit and let hers continue to grow. It worked out that she was going to get the same amount of money either way, so why not let hers continue to grow and get a 32% raise when she turns 70. So it was something I didn't know about that you could do with Social Security. I learned it in the course, and so I would highly recommend anybody that has the opportunity to take this course, do it, because it's going to give you that much more of an advantage while talking with your clients.
All right, Matt, can you hear me?
I can hear you loud and clear.
Great. Hey, Matt, thanks for joining us today on the AMS. I'm going to interview here the only black level producer, over $10 million annuity production at Family First Life. So thank you for joining me today. I know you recently had an annuity. You've written quite a few this year. You're well north of $1 million, but you had one, about a $500,000 annuity that you submitted. And correct me on my numbers if I'm off a little bit, where you had a couple. Two ladies that, I forget exactly where they were in retirement, how they got the money, but a fairly sizable amount of retirement, $2.9 million. And you were able to, without violating your license or the laws surrounding that, because we get a lot of flack. Once every third presentation I do, there's someone that comes up to me and says, well, you can't give that advice. That's the securities license advice. It's absolutely not true. In fact, the code, the actual code came out in 1940 that talks about the three things that you need to do to become an advisor, that you need to adhere to advisor rules. Are you discussing or advising on securities? The second thing is that your profession? And then the third thing is, are you getting compensated on it? Okay. We don't fall into that. There's exceptions for licensed insurance agents as long as they don't do the following: get compensated for it, right? Because we're not. And two, give advice about specific securities or mutual funds. You can't tell someone, I suggest you sell this stock, or I suggest you buy this bonds, or I suggest you purchase this ETF. You can't do that, bottom line. But you can give people information. I think that a lot of people miss the boat, but you've come up with kind of a nice strategy when you're dealing with these clients that have more money, not the $40,000 IRA, that's all I got, but $2.9 million. You've come up with a pretty neat strategy, kind of pitting their current situation, which you analyzed and you saw it had a lot of fees, against other companies and let them battle it out. And you just extracted out some for the FIA to handle some of the future. I think it was an agility. I can't remember exactly, but fill us in on what you did, how you found the money. We got a solid 10, 12 minutes here. Lay it on us. How'd you find this money and how'd you navigate that?
Yeah, no problem. Thanks for having me on, Sean. So I think the first thing that I would say is in regards to your lead strategy, the reason why it's so important to use every single lead source. I can think of my example here where I'm literally running a social insurance lead, final expense, free will type scenario. Now, generally speaking, the reason why I like that lead though is because people that may not need final expense, they might, if you have money, you're probably interested in having maybe your will updated. So a lot of times for agents, it's not just about, a final expense policy when you're dealing with that free will type scenario. So I like that lead source. I've always used it. I also think of Tiffany Grunberg recently. She had just a direct mail final expense, like a BPL, where she wrote a $650,000 annuity in the final expense. It's final expense, segment of what we do. So
Right.
my message is it's amazing when you're going along in your career and you're, maybe you're running the 20 just final expense appointments every week, getting up to 30 with your EverQuote mortgage protection or whatever your scenario is. But I think what happens is, and people lose sight of, is over time, what you'll find is with those massive amounts of reps and action, you will eventually run into the person that's got $1 million that really has a new need that you can help and discover. And it comes with those reps, and it just comes with staying with it. And what will happen is, if you're running that massive amount of appointments, my message is, this may be a once in a year type deal, because that's usually what it's been for me. When you find, I might find 1 or 2 people a year that's $1 million north that are going to move that type of money. But because of the massive action and commitment to all types of lead sources, I think it's a great way to go. So really, the driver was social insurance, got in the house, sat down. Interesting enough, one spouse wasn't talking to the other spouse. So one spouse filled it out, kind of a normal scenario, and she was concerned about maybe getting some life insurance. They own their $550,000 house outright. So I'm pulling up to my final expense appointment. They own a $550,000 house.
Right.
I literally sit down with them and I do a normal financial inventory. And the lady that actually inherited some money as well as had IRA money, etc., she was in control of the conversation. She was the leader of the household. The other woman, her spouse, was the one that actually filled it out, and she was more concerned about it. So the conversation drove really through the person that inherited the money, not so much the person that ended up filling out the form. The first thing I did to disarm the appointment was, I was like, well, you know what, if I'm in your guys' shoes, I really wouldn't recommend life insurance at this point. You really have no debt. You have a ton of assets. But here's an area that I think I could help you out since I'm here, if it's okay with the two of you. Just how they operate, I was asking for permission type scenario. If it's okay with the two of you, I'd like to spend maybe 5 or 10 minutes of our time just to discuss some areas that I think I could help you improve with your existing maybe portfolio or anything that you're doing right there. And they agreed to it. And I think the reason why they agreed to it, Sean, is the fact that I didn't shove down a $30,000 final expense policy that they didn't really necessarily need or look for. So that actually, taking away the sale, actually opened up the new horizon. And I think a lot of times you've got to be patient, is what I'd say with some of these lead sources, in order to get to maybe that bigger dollar, or the bigger problem you solve, the more money that you get paid. So throughout the financial inventory, they did have about 2.9 million, mostly with managed brokerage firms, some of it in a trust, some of it IRA, several variable annuities, a pretty big portfolio, I guess you could say, of a variety of things. Long story short is, I just started to ask questions about, are you concerned about the market and where it's at? We're on a 10-year run. On average, these bull markets the last 7 years, we're well past that. So I'm just having a conversation on what's their concern with their money, and more importantly, what are you currently using the money for?
Yeah.
What would you like to see?
Important.
What do you do with your money? Because they had no real bills. We through the financial inventory, I already knew they were making about $8,000 a month with no bills. So I'm like, they're not really taking systematic withdrawals. However, the older lady, she was 71, she just started to take her required minimum distribution. So there was kind of a way to start to talk about, okay, well, the two things that I really specialize in is eliminating negative returns and fees. And generally speaking, what I've seen is, when we look at portfolios, and we look at the average of what they've done, very underwhelmed on how they've performed. And there's a lot of ways that we can give you the most amount of growth without any risk or fees. And that's really, I said, that's really what we're talking about. So if you don't mind, I said, let me explain to you how indexing works.
Mm-hmm.
And I just, wrote on the back of a piece of paper, and I said, hey, if the market goes up, you lock in gains, and then, you have a new water line. I used 100,000 at that point because she was a little bit like standoffish. I knew she had some money, had no idea how much money it was one of those where it was such a quick appointment in the beginning where I didn't have the trust enough to know the overall picture.
And she didn't fill out the form, correct?
She
wasn't the one that filled the form
either.
Yeah.
So,
and let me expound on something real quick, because I think it's important to everybody watching. And this comes, you've been doing it for a long time. You've got some repetitions, which is what you're talking about. But that financial inventory is what everything starts with, right? You use the financial inventory in final expense. You use the financial inventory in a mortgage protection. You're looking. You're saying this isn't a single wide. This is a $500,000 house or more, right? There's no children around. This is a couple here who's just taking care of themselves. And I think that's important because it goes both ways with agents. When I hear you say that, it just resonates, because there's agents who will go into a house like that and not analyze it, not see that there's a Cadillac collection in the car, in the drive, not see that they have a swimming pool, there's pictures of their home in Palm Springs and all this stuff. Yes, that's rare, I get it. But then they go in and they start talking about $25,000 of coverage. You got to pivot on that. You should be aware that this financial inventory can lead you to bigger things. And in order to execute on that, you got to be aware of how some of the cash building IULs work, how annuities work, things like that, because those are big paydays and you're helping that client. Now that client's this many, the rest of them are like this, right? But also be aware that way too. You go into a single wide, you go into a car that, Ford Tempo from 1983, you can tell they don't have a lot of money. You got to try to fit their budget. So just because they're nodding their head doesn't mean that it's going to stay on the books within one month, right? And oftentimes those policies, if you make them too expensive, right? And one of the things you taught me is don't use your idea of what's expensive, but definitely use their idea. Look at the budget, how much money do they have, how much money they're making, and apply the right coverage. I think that's why you've always had good persistency, even though you are pushing people, right? You're motivating people. You're not going to keep all of them, but you're pushing them to the envelope of their comfort, and you're trying to put the right policy and the right protection in place for that person. So, anyways, I just wanted to expound on that because I think it's something we've done well and something that agents need to emulate. But please continue.
Yeah, as the appointment, I'm explaining indexing, their eyes lit up, and they said, "Oh, we had an old account with Edward Jones," is what they said. We had an old account. We liked that account, and that's not where their money was at currently. We liked that idea. And I just, easy question when somebody says, I like that. What did you like about that? Well, we like that we can't lose any money. So I said, are you seeing some losses right now? Are you seeing some losses on your current portfolio? And they're like, yeah, it's a real concern for us. We're really concerned about it. And I said, do you mind if you share your statement with me? And they said, yeah. I had a good enough rapport where all of a sudden just shifted. It's like they knew I was trying to help them. It shifted. They brought out their statements. And obviously, like we've discussed, I'm not saying, hey, this stock's bad and, you should sell this and do that. There's none of that stuff. It's like, okay, wow, look at this. The gentleman was a custodian on the account. He has trading rights. He's traded $250,000 of your dollars in February, and he hadn't even talked to you about it. And to me, just as a general statement, that's a concern. Like what's going on in February that's so important that we need to be moving money around now. December, maybe when we have that all-time low, I could get it. But long story short is they're paying extraordinary amount of fees. They saw some negative returns on many different accounts. And we got into the conversation of how indexing works. And I just showed them a Performance Elite 7 using systematic withdrawals and saying, listen, I always just go off the worst case scenario, going off that illustration where in the last 20 years, the worst 10 in a row with a 50-50 split between a 1 and 2 year participation on the indexing account, it would earn like 5.75%.
Yeah.
Like, listen, worst case scenario right here, you're earning more money than your current portfolio has done over the last several years. And that's all I said. So I mean, it's just math, right? And I always say all you can do is judge your performance or advisor off of what they've currently done. So they've had him for 4 or 5 years, I believe, or something like that. And all-time highs. This is the best we've ever seen the market. I think this is the key point too. This is the best we've ever seen the market, and you're getting like 3% on your money, and you have all this risk. So to me, like showing them, hey, this account, this Janus fund, where literally Athene is taking the best 250 stocks in America that gives you the highest amount of growth without the risk. That's what the stock portfolio is in that Janus fund. If we can put you in something like that, it just makes a lot more sense. They were so sold on it. They're like, yes, we'd like to do it. It's almost like I could have maybe tried to press to have them do it right then and there. I wasn't about to put their entire portfolio into that product due to suitability and everything else. So what I actually recommend is, hey, listen, use you and I said, Sean Ruggiero, my business partner, we have Vanguard accounts, and I know for a fact that from personal use, they are very low in fees, and they have some great portfolio options, and we can get you with a financial advisor over there that can make some recommendations to you on what to put your money in and eliminate a lot of the risk and everything else. So here's what I'd recommend we do. Let's actually move your money to Vanguard, okay? And we went to the bank and did the medallion signatures to move the money to Vanguard. And I told them I'd take care of the IRAs for the systematic drawdowns for their required minimum distribution that she was facing. They liked that idea. I told them I would take a portion of their trust brokerage account and put it in a PE7 as well. They like that idea. This is going to be a long period of time, obviously. Here there's like 4 or 5 applications. It's going to take time. I still got to earn their trust. I've written the apps. I actually just have written them this past week. But it just goes to show you that the money then got transferred to Vanguard. So now we're going to make a request to Vanguard for a portion of that money. And it was such an effective tool, Sean, and it's thanks to some of your training you give me as well. But it's such an effective tool because they can actually ACAT the money, meaning they can just request it and take it, right? Because so there's no waiting period where it kind of accelerates the money, the waiting period and who's going to take what. So really, when you have a portfolio that you can only use maybe 50% of their assets to put into a fixed index annuity because of suitability purposes, and they're not really happy with their current advisor because that's what they said, they weren't happy with their current existing advisor. I believe utilizing, maybe bringing in a third party Vanguard type scenario, utilizing their, and what's great about it, because it's new money to them, they're not fighting you with your money that's coming to you, because you're up front with them. You're like, hey, here's what I'm going to do. You're going to keep this much money. I'm going to make a request to this. I'm on the phone with the clients at the same time. What are they going to say? Okay, yeah. Does that make sense? It's a new account. So there's no relationship there. They're like, okay. So it's a really effective tool to help just make sure you're diversified. And they were gung ho wanting to do the whole thing, their whole account. I'm like, listen, if you were my parents, I would tell you not to do that. If you want to have a diversified portfolio, this is going to help you tremendously protect the majority of your money, which we want to do, but we can't just put it all over here. So I think it's just doing the right thing, time and time again. And obviously, like you said, not making sure that we don't, discuss individual stocks or tell them what to sell or what not to sell. That's not our position. Our position is to explain how a fixed index annuity works, how it can benefit them, and how they can eliminate fees and negative returns, and then potentially never have to worry about outliving their money, which is the number one fear of retirement. So
and that's well said. The idea that we want to give them a good financial strategy, and one product for your whole financial strategy, especially when you have 2.9 million, it's not a sound strategy. Someone comes in behind you, they could question a few things. So they leave some exposed to the market, so they have good positions to fight inflation. They have some that's in more liquid funds, right? But then that middle bucket with a large FIA that's going to pay you well, it's a great strategy. And so for everyone on this call, just to summarize, Matt used Vanguard, kind of to do the dirty work, but also keep him legal, right? So just like you would recommend a plumber, oh yeah, you've had some trouble, you can't get your toilet fixed or your sink, stop freak and call Beacon, right? For people who aren't in Seattle, that would make no sense. But I know a plumber Am I a licensed plumber, Matt? If I recommend a plumber, am I a licensed plumber? Am I telling them, hey, let me get under there and crank the wrench? Absolutely not. But am I entitled to give them a recommendation? Absolutely. I'm a homeowner too. I'm an investor. I'm someone who saves. I'm making a recommendation. And now that I've turned them on to the idea that, and they're Googling Vanguard. Vanguard's got the best price you'd ever see, right? Outperforms the market. Morningstar, okay, and we can pass this information around. But Morningstar shows that index funds outperform managed funds an average of 95% of the time. And the 5% that do outperform the index funds can't do it the next year, and certainly can't sustain it for multiple years in a row. The market is way too efficient. So does that mean that managed funds are bad? They're paying for fees, right? Matt, we can't control the market, but we can control what we pay for it. You use a line like that and say, honestly, I recommend, because I'm not licensed to sell stocks, buy stocks, things like that. But I recommend you talk to Vanguard. But what we can do is once you have the money in Vanguard, you could send 500,000, you could send 40,000, you could send 100,000 over here. And Vanguard's structured different. They're not trying to protect this assets under management and fight it off and say silly things like annuities are bad, right? They're just out there doing their thing because that's how they've been doing it since John Bogle created the company. So, it's great input, Matt. Thank you so much. Appreciate it as always, and look forward to having you on the call again very soon. Take care.
All right, thank you.
Good morning, everyone. My name is Jack Yu, and I'm with FFL Financial, and I'm wanted to thank Sean and Bridget for having me here today. And I'm here today to talk to you about the ATHENE Agility. It's a brand new product that's taken the market by storm, and it's a fantastic way to help protect your family's retirement and at the same time build for the future. But first of all, I just wanted to touch base on a couple of the basics for some of you that are relatively new, that are trying to get out into the field and present annuities. For me, it was a real work in progress. It was really difficult at first to make sure that I kept asking the question and tried to find the money and book another appointment, because I was so busy trying to sell the life insurance that as soon as I got the check, I'd up and run. So basically, one of the real simple tools that FFL has to offer is the inventory sheet. So you can get these from us, and we'll have these posted up on the AMS site after this. But you can see this basically is a great way to introduce the company. It has these bullet points down here, which I'm planting the seed early when I'm talking about safe money retirement. I'll say, hey, John and Mary, we protect families' mortgages, we do every type of life insurance, but we specialize in safe money retirement. Because of course, the reason we're here is to protect their final expenses, or to help them with a piece of life insurance, or perhaps it's a mortgage lead. But in fact, I'm trying to plant the seed early by pointing out our specialty is safe money retirement. And then as you're moving through the presentation, this tool here, this inventory sheet, helps keep you in line. So I would forget to ask about their health or the various questions. And once I was able to posture that with this sheet right here, you can see they're asking, what is your health? And if you had any surgeries, and what sort of medications do you take? And once you've built authority behind what their health is, then the next question for me is asking them what other life insurance they have, and if they have any financial savings or vehicles in place. So the way I do that was with a relevant crossover statement, right? Because I don't want to look like some identity theft and walk in and ask them about their retirement vehicle. So basically it's very simple. We say, hey, John and Mary, do you have anything else in place to protect each other or offset the mortgage, like a life insurance or 401k IRA? And that question is very simply asked right here. So it keeps you right in line with asking the question, do you have anything else to offset the cost of the mortgage or offset the cost of your burial, 401ks, IRAs, stocks and bonds. Now that you've inventoried it, then you can basically put it in your back pocket, carry on with the presentation, and make sure to double back on it at the end. And right now I carry on with the presentation talking about protecting a family with life insurance of various types. But for me, it was always like get up and run and take the check. So I had to make sure that I planted myself down and ask the question. So the best way for me was to have something in my hands. So literally, I'm not a brochure person, but Athene, they have a wide array of beautiful marketing materials, and this is somebody's life savings, right? So taking the extra step to make them feel comfortable and to give them a beautiful brochure from Athene really helps to solidify the authority of which you're presenting the Safe Money Retirement. So they've worked so hard to earn this money, they want to have an extra level of comfort. So I pull out the brochure and I have it with me. By carrying them in my bag, I was basically able to remind myself, okay, don't walk out without asking the question, right? So then when I'm about to discuss it with the family, I'll say, John and Mary, you mentioned that you had that $100,000 with XYZ, and you know, as I mentioned earlier, we specialize in safe money retirement, and for most of the traditional retirement vehicles in America, they're all variable. And that just means when the market goes up, you can make money. But if the market goes down, you can lose money. So there comes a time in most of my family's portfolios when it makes sense to put some of it somewhere safe. And that's why we offer these safe money retirement plans. So I give them the brochure, and I reference this graph right here. Basically, I say, hey, you know, as you can see, our market, the S&P 500, which is the red line, has been quite a roller coaster over the past 20 years. And that's not uncommon because what goes up, I let them fill in the blank, must come down, right? But again, how much can you afford to lose? And most of them say, hey, we can't afford to lose any of it. And that's why we specialize in safe money retirement. So I basically show them how when the market goes up, the FIA goes up and you'll be making money. But if the market goes down or has a bad year, you lock in your gains and you're free from any downside risk. So this is the point where I'm showing them where, hey, look, it makes sense to get yourself out of the market, put it somewhere safe. And the big selling point for me is to talk about the difference between realized gains and unrealized gain. Because in the market, you could have made 5%, 10%, but you could lose it any day. Whereas here, as you're making interest year in and year out, every time you do so, you lock in. And if the market has a bad year or a bear, it starts to go down, then you're locked in principal and interest. So that's a very dramatic difference in most families' retirement savings. So with that said, I'm able to get that information and book another meeting, get the statement from them, and meet with them again next time. So once I'm able to show the family that they're able to protect their savings and they have a great potential for gain, then I start introducing them to the benefits of the Agility product. The Agility product not only has no fees, but it also has a benefit base. And the benefit base acts like a life insurance to protect the family in a case of need. It's very interesting. If I were to roll over $100,000 into Agility, from day one, they give you a 25% bonus in your benefit base. So immediately your benefit base goes from 100 to 125. And then every time you earn interest, they multiply that times a 1.75 multiplier, basically giving 75% extra what the interest is in each given year of interest. So real quick, you can see how the benefit base is growing. For example, in a year or two, you might make $10,000 of interest on $100,000, which is 10%. And that 10,000 would be multiplied by 1.75, giving you an additional 17.5 in the benefit base. Now, when you sum them up, your accumulated value, which is your principal and your interest, would come out to 110. And your benefit base, God forbid if I should pass away, would roll up to 142,500. So you see how quickly that's jumping in contrast to the accumulated value. And that's something that's so important, especially for families that are turning into their 60s and 70s. Life insurance starts to get expensive. In fact, I met a family the other day, and the husband, he had a really bad health condition. It was terribly inferior health. So there wasn't a whole lot that we could do for him at age 75. And the cost of a piece of whole life or a guaranteed whole life was starting to run $300-400 a month for only $25,000. So with that said, I was able to ask the questions, identify the money, and he had $180,000 that in a couple years or straight out the gate would get a 25% bonus. But then in a couple short years could easily bring his benefit base into the into the multiple six figures. So that was really important to the family because, you know, his health being a real obstacle to getting life insurance was prohibitive on their budget, right? So with that said, I also explained to them that if I should pass away, the family has options. They can take your accumulated account value, which is your principal and the earned interest, for example, $110,000. You can take that in one lump sum, or you can opt for the benefit base, which is a much bigger number, as long as you decide to take it over 5 equal annual payments. And that, for most of my families, would be the choice, God forbid if I should pass away, because of the tax implications. I'll give you an example. If I worked, if I passed away and I left my family $100,000, of course they could take it in one lump sum, but say for example, my son, he works at CVS and he makes $50,000 a year working at CVS, and suddenly he ran into an inheritance from this of $100,000 that would raise his taxable income for the year to $150,000. And you know, make a serious difference on his tax bracket, versus splitting it out into 5 equal payments, much lessening the tax footprint. So that's one of the major benefits. So let's take a closer look here. So the Agility has options, right? So again, we talked about here the $100,000 with the 25% bonus for a client that's age 60, right? If they were to inject $100,000, they would get a 25% bonus straight out the gate at age 60. And then in 10 years, it's amazing what this product can do. They basically have choices. In 10 years, of course, you could take the cash and go, and given the interest rate over the previous years, you can see that that would raise it from 100 to 184 at age 70. But this is really intriguing here. The benefit base, because of the 25% bonus and the 1.75 multiplier at age 70, could translate into $287,000 of a death benefit. I mean, that is just something that really takes it to the next level. And in addition, at the 10-year mark, they're entitled to turn on a lifetime income. So that's really something that, you know, it's not something to replace the Ascent product, because it's lifetime income that is meant to be turned on in the year 10. So it's a little bit different than the Ascent, where you can turn on lifetime income at any time, but this really can come into play because this lifetime income at age 70 is index linked. So this client could opt for $15,000 a year in guaranteed lifetime income, but because it's index linked, it grows as the market grows, which is something that no other product out there does. It's really, so let's take a look at how that rolls out. If you can see here, here's the example of a 60-year-old with actual interest rates from historic rates over the past 10 years. So we used actual historic. And then if you move over here, you can see the accumulated value growing and the benefit base growing much faster. But then here, after 10 years, the client has the option to turn on the guaranteed lifetime income. And with that kind of money in-house, they start off at $15,000. But as the market grows to pace with inflation, the annual amount of income that they receive grows from 15 to 18 to 20 to 21 to 25, and it just keeps going. And looking at the actual interest rate here, you can see these actual interest rates from what we experienced over the past 10 years will play in as well. So if you see where the interest rate starts going up 4.66%, the 15 starts increasing, the market went up 16 points, and so forth. The income per year goes up. And it's very interesting, when the market has a bad year or a negative year, which is why fixed FIAs are so powerful, even when the market zeroes out, this thing stays the same. So you're not losing any value along the way if the market should have a negative year or tank out. So that's really the power of the lifetime income option on the Agility, and Again, I want to thank you for having me here today. We're going to be posting this stuff up on fflams.com, and you can feel free to email annuity@familyfirstlife.com. Make it a great one.
What wakes you up every morning? What will you do with your future? See, we have two choices. You can choose to just survive, to be average, or you can choose to be great. You can choose to stand out. You can choose to succeed. See, when most people are asked what wakes them up every morning, they say their family, their kids, their spouse, and yeah, that definitely does it. But why don't you dig deeper? Why don't you go further? See, I want to make sure that I fulfill my God-given destiny. I want to make sure that I'm helping every single person possible, seeing them succeed, fitting the pieces to their puzzle, and everything I can do to help. I've been down and out. You've been down and out. I've hit rock bottom. You've hit rock bottom. But we keep getting up. That's what makes us strong. Because we don't ever want to feel that way again. So what wakes you up in the morning? Because that's the question you need to ask yourself. That's the purpose. Because you were born to succeed. You are great. And the best is still in front of you. Your dreams, your goals, your aspirations are all coming to fruition. Enlarge your vision. Open your mind, expand yourself, and seize the opportunity in your path, because this company is growing and growing quick. Don't get left behind and get better every single day. Decide what you want, because I want you to succeed. And prepare for your success. Be positive and avoid all the negative. If there's negative in your way, get it out and move outside of your comfort zone. Because if you stay inside your comfort zone, it'll ruin you. But if you take the leap of faith and get outside of your comfort zone, it will lead to growth. It will lead to success. And it will lead to everything you want. It's not the start, it's not the finish that matters. It's every single thing in between. So I challenge you to become obsessive about the process. Enjoy the process. And never, ever give up. So I ask you again, what wakes you up every morning?